Yeah.
Good afternoon, everyone. Myself Satyam Gupta. Very warm welcome, dear Dr. Raj Chawla, sir, organizer of today's webinar, and today's speaker, CA Manish Agrawal, sir. Dear Dr. Raj Chawla, sir, I was very warm welcome to all the participants joining us today for this insightful webinar. I would request dear Dr. Raj Chawla, sir, welcome address today's speaker, CA Manish Agrawal, sir.
Thank you, Satyam. Good afternoon, everyone. I welcome you all in this today webinar on setting up and scaling US business for Indian entrepreneur by our young and dynamic speaker, CA Manish Agarwal ji. And today he will focus on entry structuring LLC versus C Corp versus Indian subsidy or branch, US federal and state registration process, EIN, setup and banking, cross-border payment, transfer pricing, and intercompany contracts, US state tax nexus, sales tax, and payroll tax obligation, income tax, FEMA, and ODI compliance for Indian promoters investment abroad, real example of Indian startup establishing in the US. So our speaker will discuss all these. And also, if you have any other query, then you can ask our speaker directly, or you can put your query in our Q&A. After the deliberation by our speaker, we will take up all of your queries and will try to reply all the queries. Thank you very much for joining us. Over to Satyam.
Thank you so much, sir. We are truly privileged to have with us CM Manish Agrawal, sir, co-founder and partner at True Leisure Consulting LLC, a professional with over 13 years of experience in international taxation, transfer pricing, and cross-border advisory. CM Manish is not only a rank holder chartered accountant, but also an expert in US taxation and global mobility compliances, having worked with leading organizations like EWOS, ITC, and Vedanta Group. He has successfully advised numerous clients across India, the US, and other countries on complex tax structure, global compliances, and business setup strategies. He is also a regular speaker at reputed forums such as ICAI, Taxman, and various international summits, where his presence are widely appreciated for their clarity and practical insights. Today, he will be sharing his expertise on setting up and scaling US business and Indian entrepreneurs, a topic that is both timely and highly relevant for professionals and startups. Explore global expansion opportunity. Once again, I extend a warm welcome to everyone and express our sincere thanks to CM Manish Agrawal sir, for taking out his valuable time to be with us today. CM Manish Agrawal sir, over to you. Take over the session.
Thank you, Satyamji, for your very warm introduction, and Dr. Raj Savla, sir, for your invitation and allowing me to share the insights with the participants here in this forum. Uh, So, first of all, before we begin, and I think it's very relevant to understand the current uh, economical and political landscape and the overall situation so that we can appreciate that what the whole topic is about and why expanding into US makes much more sense despite the. So, I mean, in terms of context setting, I mean. We all know that US by far is the largest economy in terms of the technology, in terms of the startups working over there, in terms of the Wall Street, and in terms of the capital market fundraising. So, I mean, it's not that I'm underplaying that Indian market is not something which we should thrive on, but any business which is looking to expand outside India or they are looking to go global generally, and if they want to get listed on any particular stock exchange or raise a significant amount of funding, the natural choice that would come in the minds of investor or in the minds of startup founders or the organization owners would be to explore the US market because that's where the real money or the innovation happens most of the times, especially with this AI and everything coming up, the startup. US becomes one of the hotspots for the innovation in AI and the other technology. So, that being said, we do face a lot of tariffs and other geopolitical pressures from the current executive government in US in terms of levying additional tariffs, a proposed tariff even on the outsourcing of the service that was proposed recently, recent H-1B hike and the increase in fees. I mean, with all having said and done, US still remains the primary market, and India also remains one of the major trade partners for the reason that you cannot ignore each other. US being the largest market and India being the supplier of the largest skilled manpower and the talent in the IT and the overall US skilled space. So, what I'm trying to say is that despite these political headwinds and the current environment, US still remains a very attractive market from an Indian standpoint of view. And if you want to expand outside India, and once you decide to expand outside India, there comes the next steps from if you are a financial advisor or a consultant to your organization that how do you actually expand into outside while this is a thought that you want to expand into. So uh, even if you're advising, for example, if you say that your client wants to set up a business in India, your obvious questions would be how do you set up a business in India, be it in the form of a partnership, a private limited company, an LLP. Similar way in US, the business structuring plays very critical part. That how do you structure a business over there, be it basically helping the client to navigate what form of business it is, where do you register your business, what are the taxes over there, how do you comply with, and then giving a handhold assistance from this point that okay, your business is set up and now you're ready to move with your operations. That's where in this session we will discuss upon that. Okay, we will discuss from start to operationalizing a particular business, and then uh, where is your role? I mean, the obvious question that many participants would have in mind that okay, we from India, how can we do the compliances or how can we set up the business sitting from in India? I mean, uh, most of the, as I said, that businesses are highly digitalized business. Even the governments and the compliance in US are more digitalized. So there is a lot of role that you can play while being here in India and tap up the professional opportunities for your clients. Many of you would have some of your NRI clients or startup founder as a client who wish to expand outside India. So this is one area of a professional opportunity point of view that you can tap because if you assist your client in setting up the business, it's most likely that they will also engage with you for future compliance work in the United States and the other markets which they expand. So, if you demonstrate your expertise and capability in the US business formation and the laws around it, uh, chances are very high that you will play a long role with the client's success journey as they move in the US and the other developed markets. So, with this, let me begin with my presentation so that we can do a structured discussion for today's topic and the areas. So, primarily in the today's session, but I'm trying to achieve here is uh, background and context. I think we have seen and discussed in this, but uh, then the other parts would be whether uh, we need to have a citizenship to get the business. So we cover some of the facts and the myths that if I want to set up a business in India, whether I need to have some visa or citizenship, then what are the options from a business entity standpoint of view? Like what are the entity structures that US permit, whether an LLC, LLP, C corporation, S corporation, different forms of commonly used business structures by Indian entrepreneurs. Then, from a tax point of view, we'll see which entity is beneficial or what kind of factors that you need to consider when setting up a business entity in US. Then the next point would be the optimal state of formation. Like in US, unlike India, where you have one single company that governs across the country, in US, each state like the 50 states in United States, each state has its own corporate law. So the company is formed under the laws of that particular state. So we need to see the corporate laws and the tax laws also, especially the income tax laws varies by each state. So a factor of corporate law income, corporate income tax law, we need to see when we decide which state I want to get my entity registered. Then a high level overview of the steps that are needed for business formation, then some guidance on how to set up your bank account, then uh, basic overview of what are the kind of taxes in terms of income tax, indirect taxes, payroll related taxes, how this works in United States. Then uh, from if you would like to do business in other states, let's say if you are registered in one state, but if you are expanding into other state, how would you do it? What kind of application or expansion application that you need to file? That we'll also see. Then the last, which is the most important part, and why we are gathered here is as a professional, what are the opportunities for me? What are the areas in which I can service my clients and how can I tap those professional opportunity? I'll try to share some of my experiences, how we can go and tap these kind of opportunities for your client. So with this introduction and the background, let me just begin. I'll just turn off my video for a while so that I can focus more on the content itself. But yeah, I'll be turning on in the meanwhile. So the first part, I think we have covered the background and context. But yeah, let me move to the very basic question that most of you would have, whether you need to be a citizen of a US to form a company over there. The answer is definitely no. Even as an Indian resident or an Indian citizen, you form a company or a business LLC or a partnership in United States. Uh, you can be an overseas director. You don't need a citizenship or a green card, anything to be a director in the US corporation or a US LLC. But if you need to uh, conduct a physical business in there, I mean, if you want to stay there in United States and do a business, you definitely need a visa, business visa. And if you need to stay for a longer period, you need a specific category of visa like H1B, L4, or depending on your requirement and the objective of the business. So to make it simpler, you can form a company by putting Indian citizen or a resident as a director and a shareholder, but you definitely need to have a visa for doing your business in United States if you want to stay physically in United States for a period which exceeds your tourist or a business, or if you want to stay for a longer duration. Now, what are the typical business entity options and how do we generally determine that uh, or the factors that we need to consider when deciding upon the business? Uh, this basically, so why it is important to uh, to make a decision on the type of business entity because it significantly impacts your future business prospects. So, for example, uh, uh, if you want to uh, raise future funding or you want to get more investors on board, you will probably like to go for a corporation business because in LLC the flexibility is limited. It's more of a closed affair. Then, secondly, how do you want to protect your personal liability in a business entity? Like in India, or a company gives you a liability limited to the extent of your share capital, whereas in LLC or like in a sole proprietor or a partnership, regular partnership, your liability is limited not only just to your capital but also to the extent of the your personal losses. Similarly, uh, the ability to obtain credit and funding, which we discussed, like a C corporation is regarded as a more widely uh, uh, or an acceptable source of investment vehicle, whereas compared to an LLC or a personal business or a partnership. Also, the compliance requirement. Obviously, even in India, a company has a more compliance requirement than compared to a LLP or a normal partnership or your sole proprietorship. So from all these angles, we need to see at what kind of business entity I need to uh, form initially. So if we specifically look from the point of view that whether how the Indian or be it a matter a non-resident, a US non-resident, what are the options for that person to uh, uh, form the entity in United States? So typically, in our experience, we have seen that Indian resident or citizen they generally go for a C corporation or an LLC route to form their business entity. There is third one, S corp, but this may not be very relevant from the point of view Indian citizens or resident if they're looking to expand because S corp requires all the persons to be US resident. So in that case, Indian residents may not be able to meet all of the requirement as such. So the typical options that we are left with is a C corporation and LLC. And so and the third option, which is an unincorporated venture, which is called a branch entity. But branch we typically do not uh, advise for the reason that branch is typically taxed as a permanent establishment. And there is quite a risk that the entity will get double tax because the branch of an Indian entity would be uh, so the branch of Indian entity would be considered as uh, extension of the Indian subsidiary and it would get taxed in the income in the hands of the Indian entity. And there is also a risk that branch would also be taxed in US itself. So there is a risk of double taxation over there. Uh, so branch structure is typically not very much preferred unless you have a very specific requirement that you do. I think there is some background noise coming in. Someone from the organizing team can mute the participants or whoever is if they are not on mute. Can anyone who is not the speaker please mute yourself?
सीधे तो नहीं भैया कम से कम रेट है भैया क्या केले कर लो 40 रुपए का दर्जन लोगे तो 70 रुपए का
Yeah. Sorry. Is my screen visible to all? Yeah. Okay.
Yes, sir. Okay.
Yeah. Sorry to turn off on the go. Yeah. So we discussed the type of business options. So typically it's C corp or LLC. S corporations and branch structure are typically not used by the Indian entrepreneurs. But yeah, it may be used if uh, you have specific circumstances. But we are answering it from the point of a general overview. Now, as I said, C corporation. So C corporation is similar to like a private limited company or an op company structure here in India. In US, the word that they use for C corporation is INC, just like private limited at the end in India. And the C corporation biggest advantage is that the liability of the shareholder is limited only to the extent of the share capital that they have put in the company. And also C corporation has a flexibility to bring in more investors if you need at the later stage for the expansion of the company. C corporation also offers the flexibility to transfer the stake if at later point of you want to dilute your investment and bring on board new investors, you can do that. And the from a tax point of view, one of the very structure like a company in India is taxed. Similar way, a C corporation is taxed. That is, C corporation is taxed twice. One at the time of its profits, and then when it distributes dividend, the profits are taxed in the hands of the shareholder as well. So there is kind of a economic double taxation here because the same income is taxed first in the hands of the uh, company or at a corporate level, and then in the individual as its dividend income when the distributions are made. So this is similar to what we have treatment in India after 2020. Up to 2020, dividends were taxed in the hands of the company as a dividend distribution tax, but after 2020, dividends are now taxed in the hands of the shareholders in the Indian context. But US always been the regime is that dividends are taxed in the hands of the shareholder and the profits are taxed in the hands of the company. Now, the next best alternative or after C corporation is a LLC. LLC is also the offer the same level of flexibility. That is, it has a separate legal entity and its liability of the member is limited only to the extent of the member's capital. And but the from a tax point of view, LLC gives you a flexibility. You can choose to treat the LLC as a pass-through or a disregarded entity, or you can choose to elect to tax the LLC as a corporate entity. So what it means as a disregarded entity or a pass-through entity is that the whatever the income that the LLC earns, it's not taxed in the hands of the LLC itself, even though for a corporate law perspective, it is a separate legal entity. But for the tax purpose, it can choose to be a pass-through entity. So in that case, when the LLC chooses to be a pass-through entity, so pass-through entity status is a default regime. If you don't elect anything, pass-through regime is considered as a by default regime. So that means LLC is not taxed on its income, but the members of the LLC or the partners, you can say, are taxed on their respective shares or proportionate share which they are mentioned in their agreement, and LLC do not pay any tax. But if an LLC decided to tax is as its corporate, then in that case, what happens is the profits of the LLC are taxed in the hands of the LLC only and not in the hands of the corporation. So any subsequent distributions are then not taxable in the hands of the partners. I hope I'm clear up to this here. So let's see some of the comparison or the formation highlights. Uh, so basically, as I said, in US, the company formation and the LLC formation is a state subject. And when I say formation, it means you need to file a document with the state registrar or a secretary of state so that they recognize the document that, okay, this company or LLC has filed the document with me. I certify that this document has been filed with me, and they allot a identification number to you. And that's how the entity is formed. Either as a C Corp or an LLC, you need to do a filing, and what you need to file is you need to file your charter document or a draft, which is called as articles of organization. Yeah. And whether the liability is limited, yes, in both the C corporation and LLC, the liability is limited. And then the next aspect is whether the member can transfer their stake or the shareholder can transfer their shareholding. Yes. In C corporation, it's generally permitted. There is no restriction, but in LLC, it is generally limited and it is governed by the terms of your operating agreement, or you call it as a partnership deed in India, for example. Duration, both LLC and C corporation are unlimited. I mean, they are formed as a perpetuity. Pass-through taxation, as I said, that LLC is considered as by default a disregarded or a pass-through entity, meaning that the profits are not taxed in the hands of the LLC but in the hands of the partner. whereas a corporation is considered as a double taxed entity. The profits are first taxed in the hands of the company or a corporation, and then the dividends are also taxed in the hands of the shareholders. Ability to raise capital, and you can raise capital in both, but if you want to scale up and bring more investor, the next preferred option would be the C corporation. Whether there is any limitation on the number of owners you can have, uh, there is no such limitation in both the structures. Now, this I think we discussed filing work and the paperwork. So you need to do an initial filing, and that filing is with the Secretary of the State, and you file the articles of organization. You also need to maintain or draft your operating agreement in case of LLC, and in case of a company, you need to have your corporate bylaws. And uh, usually there is a requirement of having an annual meeting or an annual report to be filed with the relevant states where you are registered. And there is one concept which we'll also discuss in the later part is the concept of having a registered agent. So under the US, it is mandatory that you have a registered agent appointed uh, for at the time of your filing and for every subsequent year. So, a registered agent is the attorney or a person appointed by law that they can receive documentation from the Department of State or a Secretary of State corporate to on your behalf. So, it acts like a middleman between you and the government corporate authorities. So, it is mandatory to have a registered agent at the time of formation and for every subsequent year. So, what are those internal or documents which we discussed? For in case of a company, you need to have a corporate bylaw, and in case of LLC, you need to have a operating agreement. So both these documents, although name is different, but their contents are pretty much the same, or you could different terminology, but the essence of it is that it includes how the internal procedural part of the company, like how the profits of the company, or in case of LLC, what would be the profit sharing ratio, how the books of accounts will be there, what would be a fiscal year, how the banks will be operated, how the annual meeting will be done, how a new partner will be admitted, or how the directors are elected, what would be their powers and duties of the directors, what is the voting rule for some normal matter and the special matters. So it is basically all the internal procedure related to the conduct of the business of the company. And similarly for LLC, it the standard clauses could be what could be the percentage of ownership and distribution, what could be the who will make the critical decision, whether it will require a simple majority or a two-third majority, what happens when a member exit, how the accounts will be drawn up at that time, and if you need to wind up, what would be the procedure that you need to follow for winding up. So these are pretty standard documents, and not that, but it can be complex depending on your business requirement, but these are the typical contents of the operating agreement of LLC. So any questions so far, or if not, we can continue more. Now, if I have to compare the structure from a tax point of view, C Corp and LLC, let's talk about first about the C Corp and what are the tax advantages that a C Corp have. Yeah. So as I said, a C Corporation is taxed first on its profit, and then on the distributions that it made to its shareholders. The shareholders are taxed on as per their individual slab rate. So sometimes what happens is, uh, let's say an individual is in a low slab rate, or in a high slab rate. What would happen if all the profits of the company are to tax in the hands of a high slab individual. Yeah. So in that case, what happen is the overall tax liability would be higher if all of the profits are taxed in the hands of the shareholder because he would be at a higher slab rate. But a corporation is taxed on a flat rate of 21%. So in those cases, uh, certain portion of the profit will get taxed at a lower rate, and only remainder of the portion of the which is your distributable surplus will get taxed at a higher rate. So uh, sometimes the this dual tax structure can work in your favor depending on the uh, individual's tax slab in which it falls, and also sometimes in the state. For example, in US, the federal tax would be there, but individual is also subject to a state tax, whereas a corporation is in one state and it does not have a state tax in that particular. So it can work in your favor if comparing the individual tax and the corporation tax rate can work out favorably. Also, there are certain deductions under the law, tax law, which are available exclusively for the C corporation or where the eligibility is only to the company. So there, in those particular circumstances, a corporation may be a beneficial structure. But as I said, the disadvantage biggest of the corporation is that your profit, same income get taxed twice, one in the hand of the shareholder and other at the time of the company itself. Yeah. Now LLC, what are the tax advantages? So LLC's tax advantage, as I said, uh, uh, the profits are taxed only once. So you have an option to choose it as a pass-through taxation, wherein the profits of the LLC are taxed in the hands of the shareholder or the members only. That is called a pass-through treatment. Or you can elect for a corporation like a tax treatment, wherein your profits get taxed twice. So LLC gives you the both the option. Uh, you get a limited liability like a same treatment like a corporation, and depending on your individual structure, you can choose whether you want to pass through it. Because let's say if an individual is in a lower slab rate or in a state where is no state tax, you will prefer that the profits would be taxed in the hands of the individual members because there the overall tax burden would be lower. So and this you can change every year or you can keep same. So depending on the individual circumstances for LLC and its member and your overall profitability position, you can choose whether to go for a corporate treatment or a disregarded structure. The other thing which is very unique to LLC is that, like in a company, your profit share ratio is dependent on your shareholding, meaning how much capital you bring in the company. That's what determines your shareholding and ultimately your dividend distribution ratio. But in LLC, you can choose to distribute profits uh, in a ratio which can be different from your overall capital ratio. So that is also a different aspect. Yeah, and the uh, disadvantage of LLC is like since LLC is basically considered as an extension of an individual business only, there is a self-employment tax in US, uh, which can also be applicable in the LLC. In a company, this is not applicable because company is always considered as a separate and a different, distinct entity from its members. So there is no self-employment tax on the profits of the company, whereas on the LLC, uh, the self-employment taxes are also applicable. So as I said, in addition to the self-employment tax, the profits of the LLCs are also subject to the social security taxes in US, which are Medicare taxes, and uh, so this will also create an additional burden for the members of the profit. and yeah, which is members cannot be an employee of LLC, so they cannot draw any fixed remuneration or a guaranteed payments. If they draw these guaranteed payments, they become non-deductible for the LLC and become taxable. So it becomes uh, uh, disadvantageous for the members of the LLC to draw any guaranteed payments, like an employee. So, so you need to see from all these angles that the structure is better. It's not that LLC is always bad from a tax point of view, or C corporation is always good. Uh, in some situation, LLC may
Hello, sir.
sorry, there was some issue with my connection, I believe. Let me share my screen again. I'll repeat for past 2 minutes what I've discussed. Okay. We compared the uh, tax structure for both LLC and the C corporation, and I was explaining that uh, a C corporation can be better in some situations, and LLC can also be better in some situations. So it's not always that a C corporation or a particular LLC would always be better. It depends on the individual's overall circumstances, the profitability of the company that they want to make, and the future decisions, like whether they want to distribute dividends in future or whether they want to reinvest the profits of the business in future. Let's say if they want to reinvest the profits of the business in future for a foreseeable period and there is no dividend distribution advantage, then in that cases a C corporation is better, because C corporation tax rate may be lower than the higher end slab rate applicable to an individual, because in LLC case the profits are taxed in the hands of the individual, even if as a pass-through entity, even if LLC do not distribute the profits. So, depending on this situation, one entity structure could be better or other structure could be better in some situations. Now, let's then move on to the next topic, which is what is the optimal state for business formation. Uh, so, generally, yeah, as an Indian resident or as an Indian entrepreneur, uh, there is no specific regulation that allows you to say, okay, and you need to form a business entity in that particular state. You are free to choose any particular state. There are 50 states, and almost every state permits a non-resident investor to form a C corporation in US. So, and some of the popular state that Indian people generally go for is California, Texas, Nevada, Delaware, Florida. I mean, there are some other, New York as well. They are the popular options, and Wyoming. Now, uh, when you, what are the some factors that you decide, look at it to decide you know, in which state? So one is, of course, uh, the overall business. One could be, I think, the commercial one could be your where is your client's location. If you have a place of business over there, you have a house over there, or you know somewhere over there, you would obviously want to set up a company over there. Yeah. Some other factors could be what is the overall business environment and the reputation of that state as a business friendly state. Is it a business friendly state, or and how complex are their regulations, uh, how uh, how does whether it is easier to do business in terms of compliance or not, whether it's all digital or there is manual work over there or a bureaucracy over there, and whether there is any incentive to the worker in terms of, let's say for example, there is no sales tax or there is no state income tax in that state. So are there any fiscal or non-fiscal incentives over there? Then of course the other piece would be, whether the resources are available or there in that particular state or not. Yeah. Uh, some of the financial variables or the fees or something which we can discuss or which you can research upon and put a matrix to decide upon which state to consider. For example, formation fees. Like I give you a personal example. Let's say uh, uh, in Delaware or in Florida, or for example, the formation fees is quite simple. Formation fees means the government filing fees is simple, which is somewhere in the range of $50 to $700. But in some cases, like for example in New York, the government fees is there, but you have an extra requirement to publish your LLC in the newspaper for the New York region. So in that case, the cost can go as high as up to $1,500. So it depends the how high is the formation fees. It varies state by state. Then also the annual filing fees. In the US, most of the states have a concept of called franchisee tax. So, where, so generally you need to also factor in the annual compliance cost, whether the some states have like $200, $275. Some state like in California, there is a minimum franchisee tax of $800 even if you're in losses. So you need to factor in these variables. Yeah. Then, as I said, the overall legal system and the court system, how strong is their legal system in terms of your dispute resolution, contract management, protection of your IP, if you do this, so whether their legal system is robust or not, whether it is investor friendly or not, and whether there is any state income tax. So some states like uh, Texas, Florida, they do not levy any state income taxes, never ever. So you can also factor in those aspects when you decide mm, whether to incorporate in a particular state or not. So for example, comparison between Delaware and Nevada is done here. So Delaware, I think most of people would know, and is by far the quite popular and oldest where big companies would like to register their business. So the reason being is they have the very so if you're looking for innovative capital structure, especially for startups looking to raise funding and bring multiple level of investors or multiple kind of instruments like warrants or maybe like convertible notes, series notes, differential voting right instruments. So these kind of instruments are well known and documented in the statute. The law recognize these kind of instruments and their treatment in the regulations over. So Delaware is considered by far the very popular option. Yeah. And it's also considered very pro-business. So if I go with Nevada, for example, it's considered very tax friendly in terms of there is no state income tax, there is no franchisee tax, there is no personal income tax, and very low filing fee. So obviously, probably it would have been because Nevada is a desert state and they want to attract the investment, and that's why we see a lot of investment in entertainment sector, casino sector over there. So similarly, like in India, we used to have the special deductions for Northeast state, ATI, ATIC state. So those kind of incentives you need to consider when you decide in which way to set up your business entity. Now, if I go with the general steps or step-by-step timeline, the first step is you you check the name availability on the particular state website. Let's say if I need to go for a New York entity, I'll go on the site of the New York Department of State or a Department of Secretary, and the client would have given me the names that he want to use for his company or LLC formation. I will search for these names over there, and if these names are available, I will reserve the name payer fee, and then the next step would be I need to appoint a registered agent. There are many options available online as well. You can type registered agent for, let's say, Delaware for New York. You will get option. Uh, their fees typically ranges from 150 to 225, or depending on the package. If they want to do the filing for you as well, if they want to do the compliance for you as well, their fees vary based on that level. Then you need to draft your operating charter documents, which are called as articles of organizations or article of association or incorporation. Yeah. Once you file this on the state's website particular portal, you need to pay a filing fees to the state. For example, in New York, it's like $235 filing fees, and registered agent fees would be somewhere around, let's say, 165, 125. And then once you pay this, the state will give you a filing receipt, and in 24 hours or for 24 to 48 hours you get a certificate of incorporation attested by the state that okay, this is the uh, company that you have filed with us, and this is formed with this date under the seal of the secretary of the state. So so basis this, the next step would then be to have a apply your EIN. I'll come more on the EIN. EIN stands for the Federal Tax ID, which is called Employer Identification Number. It's the like a PAN in India. Yeah, we'll discuss in later how to obtain a employer identification number if you are a non-US person. Yeah. Then uh, once you have the EIN and everything, you then draft your operating agreement, which is your internal document. Yeah. Then once you have the document, your EIN, the operating agreement, you need to then open up your bank account with any of the new age banks, or you can open with a traditional bank. So new age banks, for example, fintech banks are there, like Mercury, Revolut over there. They are new age bank. And you have also traditional banks like JP Morgan, Wells Fargo, Commonwealth Bank over there. So you can choose to bank with depending on your partner or your payment processor. Also, if you operate in a particular regulated business or a sector, if you need any additional licenses and permits, you need to apply for that. For example, if you operate in a restaurant business serving liquor, you might need to get a liquor permit. Or if you're operating in a construction business, you might require a Department of Housing permits or state zoning permits. So it depends on the sector and the business your client is operating in. Okay, so we'll deep dive now a bit on the uh, requirements here. Assigning a registered agent. So registered agent, as I said, is act as a intermediary between you and the state corporate law authorities. So the purpose of the assigning a registered agent is that government does not deal directly with the businesses or the owners looking to form a company. You assign a registered agent on your operating agreement, or sorry, on your articles of associate organization which you file with the authority. In that you name the name of the registered agent that you have assigned, their address and their email ID and the contact. The government will accept the documents, and once if they are okay, they will mail the certificate of incorporation in physical and on the email to the registered agent's address. That's how the registered agent and the government work. And your registered agent will forward you the copies of the certificate of incorporation and any other official documents. Registered agent is typically a licensed attorney or the person who is recognized by that state to practice as a registered agent, and registered agent need to have a physical office over there in that state. The government bars a person having a registered agent with just a postcard or a postal address. There has to be a physical address of the person in that state. This is the step which I mentioned. The second step would be you need to form your formation document, which is called articles of incorporation or articles of organization. So articles of organization is like a memorandum of association in India. It includes your basic detail like LLP, head office, this, who are the initial members, what will be the capital, who will be the registered agent, basic stuff like this. Yeah, and and you need to file with the state authority, usually called secretary of the state. Now, once you file this, you will get a certificate of incorporation from the secretary of the state or the state authority. Then the next step would be that you need to obtain your EIN. So EIN is required for all of your federal tax filings, for opening up your bank account, for opening up your sale tax, any other thing, or for payroll compliance, any other thing you need for in US, you need to have your EIN. Yeah. So EIN you need to apply is called a federal tax ID. It's a 9-digit ID used for tax filing, reporting, and other documentation purpose. So you need to have EIN, even if you are the shareholders are the foreign person, and the EIN application is made in the form SS4, and it is made by the one of the director or the organizer of the LLC, and the person who need to apply the EIN, let's say in case of a member or the director of the uh, company, the person need to have either the three documents before applying the EIN of the company. Is it called SSN, ITIN, or EIN? So I'll tell you. So practical option for non-US citizens who owns a business can obtain an EIN because as an Indian citizen or Indian resident, I would not have a social security number. Social security number is a number which is given to the US resident. So, and also I would not have my own EIN. So the practical option for me is to have an ITIN to obtain first my ITIN in the name of, let's say, the registered agent's address. And then once I have my ITIN, I apply for the EIN of the company. So EIN can only be applied a person who all has either a SSN number or who has a ITIN or EIN. So for Indian citizen, I need to first get the ITIN for the director of the company. And then once the ITIN allows it to the Indian director of the C corporation or the LLC, I can then apply for the EIN. But in both the cases, I need to have a address assigned to my name or address which I can receive the document physically. So for that purpose, you can use the registered agent's address services, which is called virtual address services. Yeah. Then third step is obtaining a business license in the perfect. So uh, this is needed for some uh, specialized or a regulated business aside like a gambling business or a gaming business, or if you're running a restaurant with a liquor license, or if you're in a construction sector. So there are many sectors, or if you're in a pharma sector, procuring some specialized type of a drug or a chemical sector. So it depends on the sector, the state regulation, even in the county regulation or a municipality regulation, you need to figure it out if there are certain regulations that they need to comply or a permit that is required, it needs to be obtained. Now let's see a broad category of the taxes that we have in US. If you own or run a business in US, what kind of taxes you could be subject to. So, uh, so US has a system of taxation of at a varied level. One is the income tax, which is a corporate income tax. Uh, uh, the other is the sales tax and use tax, and the third is the of payroll tax or employment taxes. So sales tax and use tax, I'll put it in one basket. They are called as indirect taxes. Uh, so anything which is subject to sales tax, a business that sells a particular product or a service, they are required to charge a sale tax on their invoice, and it is an indirect tax, meaning you can recover from your customer if you charge it on your invoice. We'll see why we still call it as sales tax and not as a GST or VAT. Then the second broad category of tax is income tax. So income tax is that the tax that you levy on the profits of the enterprise. So it's called business income tax, corporation income tax. It is governed by the IRS, Internal Revenue Services, under the Department of Treasury of the US government. Yeah. Sales tax is as I said, is a state subject matter. Sales tax is governed by the individual states of the United States. Income tax is governed by the federal level as well as with the state level. So in United States, income tax is both federal and state. Sales tax is exclusively state jurisdiction. And similarly for payroll and employment taxes, which is individual taxation, uh, there are two buckets in one is the individual income tax, which again is a federal income tax and state income tax. And for social security, which is like a provident fund here in India, like we have a unified provident fund in India, in US, this is again at a federal level and a state level. So there are generally uh, uh, at a federal level, these taxes are called FICA and FUTA, which is federal insurance contribution and federal unemployment tax. And there are equivalent taxes at the state level. So in the next slide, I have included this bifurcation, whether the tax is at a federal level and state level for the, because employment taxes are a bit of a complex in US. It's not that very straightforward. So the first is uh, individual income tax withholding in US. So this is a tax that an employer withholds from the salary check of the employee, and it is again at a federal level and at a state level. Yeah, and it is paid by the employee. FICA tax is a social security contribution. It is called Federal Insurance Contribution Act, and um, generally, employee and employer make a matching contribution. So it is paid by both, deducted from the salary of the employee, and employer makes an equal matching contribution generally. Yeah. The Medicare tax is also kind of a social security tax, and uh, it is generally paid by both. It is deducted from the salary of the employee, and employee also pays a matching job. Futa tax is a additional levy from the government, which is called Federal Unemployment Tax Act. The purpose of this Futa levy is that during the people, if calamity or like during COVID, people have lost their jobs. So how do government funded the unemployment check? It's through the Futa contributions that they collect from the employers. Uh, Self-employment tax is generally for those people who, well, like if you work on a proprietor or a single member LLC, self-employment tax is paid by the owners. And state unemployment insurance, this is the equivalent to the FUTA. It is levied by the state and it is paid by the employer. Similar to the unemployment insurance, some state call it as a disability tax or insurance. It is again a state levy and it is paid by the employer. In some state, you have worker compensation tax, which is again a sort of state social security tax. It is paid by the employer. And then you have state individual income tax, which is like a equivalent of the withholding tax. And in some states, like in Ohio, you have at a county level tax as well. So that you also need to figure it out. And it's generally the income tax is the liability of the employee. Now, what is the difference between a sales tax and a use tax? We have seen the term sales tax and use tax. So generally, sale tax is on the sale, transfer, or exchange. So if I, as a seller, is selling any goods or providing any services that is subject to sale tax, I need to charge it on the uh, my invoice. Whereas use tax is if any product which is not subject to tax, but I'm using it or consuming it, I'm required to pay use tax on my own. So whatever product that are subject to sale tax are not subject to use tax, but the products or services on which sale tax is not charged, the consumer is required to pay the use tax or a business is required to pay the use tax. Yeah. And sales tax is a consumer-based tax that is transaction. So, uh, just to give you background, uh, uh, sales tax is different from VAT or GST that we have in India. So, in the VAT or GST, you get the input credit set off at each uh, intermediary transaction level. The business gets the credit for the purchase they made, and they pay tax only on the net value addition that they made. And um, and the end consumer also, but the ultimate tax burden falls on the end consumer. So in US, the system is bit like we used to have when we have in a central sales tax regime. You have a Form C, wherein if you are making a purchase between a business to business purchase, if you give a Form C, uh, the transaction between business to business is exempt from sales tax. Similarly, in US, we have a system of exemption certificate. So sales tax is not levied on a business to business transaction if a business gives to other business that okay, this is goods that I'm purchasing are for further resale or for processing in my process, then the sales tax is not charged if I give you an exemption certificate. So in US there is no concept of input credit, rather they work on the exemption certificate. Huh? So in US, as I said, the sales tax uh, uh, is a state subject, and it is governed by the individual state jurisdiction. In US, there are 50 jurisdictions, but out of 50, five jurisdictions do not levy taxes, which are Alaska, Delaware, Montana, New Hampshire, and Oregon. So 45 states and the District of Columbia collect sales taxes. And in sale US, the level of complexity is so significant in sales tax that sales tax vary at a pin code level. Let's say I move from pin code of New York 10017 and I move to level of 10018. The pins, there is no uniform rate across the state as well. It varies at a county level, district level. So, and you can keep a track of this through specialized technology tools like Avalara, uh, Tax Jar. There are multiple tools which help you. There is no way you can manually remember, and the rates get updated very fast. So you need to keep a help of your technology tool only to support the sale tax compliance for your clients. So there is one concept which I also want to discuss, which is called sales tax nexus. So uh, uh, let's say I am registered in one state and I'm a New York seller. I'm registered in New York, but I'm selling it to, let's say, to a customer based in, let's say, California. So nexus means if I'm selling to customer in California, I will not be required to charge sale tax in California state if my transaction does not reach a particular threshold. If the transaction of New York seller with California-based customer, let's say, exceed $300,000 in a year or in a quarter, or the volume of the transaction, let's say, thousand transactions, or the number of customers reaches a particular threshold, then the law, and in fact, a Supreme Court judgment came in 2018, which goes by the name of Wayfair versus State of Dakota, which says that there is a concept of nexus, and if an out of state seller sells from one state to another customer in different state, if the volume of transaction or the quantum of transaction or if the nature of presence of seller in that state exceeds a particular threshold, then uh, the New York seller, for in our example, would be required to charge sale tax in California and recover it, not in New York. And get himself registered in California. So this is very critical. If you're advising a business, especially the D2C brands who sells in multiple customers through different platforms like Amazon, Shopify, you need to keep a track of your nexus and see if your transaction level exceeds a particular threshold in a different state, and once it reaches a different threshold, you need to register yourself in the other state in which your nexus is exceeded. Yeah, this is the example. Uh, it was Ohio to California, but yeah, I take New York to California. Now for collecting the sales tax, like in India, you need to get a GST registration. Similarly, you need to get a certificate of permit or authority. You need to apply on the relevant ID of the government website, generally the state government website. For example, in New York, it's called a Business Express or New York NYS 100 form you need to fill in. So you need to go to the website of the relevant state and apply for the state tax permit. So, and you can apply for a sales tax only once you have your EIN number and the business is registered. Yep. No, this is another important concept, expanding business into other state. Let's say I am a business registered in New York and I want to open a warehouse in different state, let's say California, Texas. So in this case, I'm not supposed to register my business again in the other state, but I need to register my business as a foreign qualification in the uh, other state, which means that they will recognize that my business is registered in, let's say, New York with this name, and I can carry the business in other state, let's say from New York, I am expanding into, let's say, California. Then California will say, okay, you apply for a foreign California or foreign qualification. Whatever name that you're using in New York for your business, you are permitted to use that name for your establishment, for your warehouse, or etc. in California, etc. If you registered as a foreign qualification. So for foreign qualification, the process is you obtain a certificate of good standing from your original state, let's say in this case New York, because and you apply for this. The certificate of good standing means that you are a compliant and a law-abiding citizen of that uh, New York State. Then you obtain apply for a registered agent. Okay, saying that okay, I need to apply for a foreign qualification in that state. So process is pretty much the same like a new entity formation, but it's exactly not the new entity. It's not the same, but it's broadly on the same line. So you need to have your registered agent, you need to perform a name search, and then you need to obtain a certificate of authority. So you can see what we have discussed in the example. In the example is of Michigan, a company doing business in Michigan, and if they want to do business in Illinois through physical presence, they need to have a foreign qualification certificate in the new state, which is Illinois. Yeah. No, very uh, uh, I would say objective of what we are studying and why we are learning this is the professional opportunities what we as a professional can gain. Given that this is a wide market, US is very lucrative market. We also uh, uh, a general, uh, I would say a package for a company formation in India would okay, I'm not saying too high to one, but a medium range company formation, you can charge anywhere between 200 to 20,000 to 25,000 on the higher side. Okay, if there are things are simple and not that complex. But in US, even for a single uh, or a member LLC or a less complex transaction, the minimum filing fees or a professional fee for this work is around 600 to $1,000. So, which is significantly higher than what we will get as an Indian chartered accountant by doing work for India. I'm not saying we'll do stop doing work what we are doing in India. But the monetary wise and the things are quite lucrative here as a professional. So how we can assess? Obviously, we cannot be a registered agent, think certain things which we cannot do. We need that, but we can do all other work. Like we can draft the articles of organization, we can advise client on the business structure, LLC versus C corp. We can do the tax modeling and the forecasting for them. We can help them in selecting the uh, state by doing the research for the various state tax laws and their overall business index and the other policies for which the client is operating. Similarly, we can draft their operating agreement, the internal documents. Then we can help them set up their uh, tax registrations, EINs, sales tax registration, payroll taxes. And then if the client is satisfied for your initial formation service, you can always pitch them for the recurring work, like maintaining your regular taxes, maintaining your regular accounting, filing your annual tax return if you gain knowledge of your taxes and the accounting for the US laws. So this is just the starting, uh, but this can be a door to one of your US client and expanding into the US market and providing the services. And once the client is satisfied with your services, you will be able to establish your credentials and maybe uh, they may refer you to the other businesses in their network or peer. So that's how generally in our practice it works as well. You work with the client, give them quality services, and they refer you. So this is it with particular how the business works all over the world. So this is it from my side. Uh, I'm happy to take any questions on the chat board or any member want to ask. Uh, I'm available at my website and the LinkedIn QR code, and you can reach out to me on chat or email as well, or you can reach out to the organizer for your question. Yeah, thank you so much to the organizing team, Dr. Raj Chawla, for the wonderful opportunity to present, and thank to the audience for being very patient and cooperative listeners. Thank you so much again.
Thank you, sir. Sir, some question is in chat box. I am reading. Please you reply this question answer. So
Can the RA be anywhere in the US? Is it particular about state residents? So RA you need to have. Sorry, I'm having. Okay, this is the question. How to get registered agent? So registered agent you can get anywhere on the uh, internet search and get the registered agents. You can in your particular state you will be able to get a registered agent. And no, you need to have a registered agent only for that state in which you're forming your entity. For each state, if you're let's say forming an entity in New York, you cannot have a registered agent of Florida or California. You need to have a registered agent of New York only. Any major advantage of having an SSN? There is. It's not about advantage or disadvantage. SSN I as a personal cannot get unless I am on a long-term visa, H-1B visa, L4 visa. As a non-resident or as a Indian citizen, it's very hard to get a social security number of the US. Can we form a company in US here from India to trade, invest into US stock market? I think the answer to this, you need to see the RBI, LRS and overseas investment. Generally, you cannot form just for trading and investment purpose, but you need to see the RBI ODI guidelines if there is any sectoral prohibition or not. Yeah. How do we go about taking a UIN for a company? UIN stands for Unique Identification Number. So this generally, I would like to give you a brief about the FEMA process. Once the company is formed, foreign company is formed, you file for a form FC, which is uh, for your foreign compliance. You whatever company you have formed, you give the details to the banker that this is a foreign company I have formed. Now I want to remit the capital to the bank. So the bank would ask for the details of the KYC of the company you have formed, the tax ID, your Indian company directors and the shareholders who are the ultimate beneficiary of the US company, and the bank basis on that will give you a UIN. With AI and automation rapidly changing business processes, do you see a gap where Indian foundation can bring innovation in B2B efficiency. I think this is more of a business question, but yes, definitely there is a lot of room to bring AI and automation, bringing efficiency. If you are good at technology and codings and solve problem, US is the hub. It's still the one of the largest market, and people are still using some of the native and the traditional tools. So how we can explore the opportunity in US and the other state? I think I discussed this in Latline. Yes, for LLC to be taxed as an S corp, you need to have a US citizen as a member. Yeah. Yes, LLC tax on self-employment even if we use the corporate structure. Can we make bank account online? Yes, we can make the bank account online.
Continues and what do you make of the surface? What are you doing?
Can we form the company in US here from India? I think I have answered this. How a small CA firm having limited infrastructure start? It's not about infrastructure, Nakshji. It's more about your quality of service, how your digital presence is there, how you network with the right people. That's the right approach. Infrastructure, what you need? You need a laptop and you need some knowledge about or some good communication skills. I think that's what pretty much we need for this. What is the ODI provision compliance in UAE? I don't think UAE is the subject matter for discussion today. Can LLC be chosen to be taxed as a C corp? If no, you say it C corp. I discussed. LLC can always go for a C corp. Yeah. Priyansh Bengali ji. Yes, LLC can go for a C corporation structure. To build an AI-driven consulting or a data platform that can serve you, what are the early compliance or partnership challenges that one should? I'm not very sure I understand it. This is something tax related part for Odadi? Presentation, I think I'll share with the Master of the Third 10 team and we can share with the registered participants of the seminar. Okay, I think this is it. If all done, sir, can we close it for the with the thanks and closing remarks? Yeah, Satyam, you can close for the day.
Okay. Thank you so much, CM Manish Agrawal sir, for sharing your valuable insights and practical knowledge today. Your session was truly informative and inspiring. Lots of thanks all the participants for joining and making this session engaging. And a special thanks to our organizer, dear Dr. Raj Chawla sir, for guiding and creating such wonderful platform for professionals. With this, we conclude today's webinar and now moving to end this session. Thank you, sir.
Thank you. Thank you.